Good morning. How's everybody doing? Want to do a video this morning talking about my 401k and what it's done over the past 3 months. No, it kind of goes against what I normally do, but still personal finance, so I thought it was kind of interesting. Now, before I tell you that, let me go ahead and tell you a little bit more about my particular 401k. A few years back, I can't really, trying to get this heater blowing in the right direction. It's cool this morning. A few years back, I quit my job, and I didn't just quit. I got another job. I went somewhere else, and it was more money. And anyway, I didn't work there about 3 months, and they called me and asked me if I'd come back to where I'm at, and they'd give me more money. So anyway, blah blah blah. I quit my job, and when I quit my job, I wanted to pay off some debt, and I had a 401k, and I didn't have a whole lot of money in it. And it's really almost depressing because I've been putting money back in this thing for like 15 years or something, and I only had like $15,000 in it. And I'm gonna tell you, and not political, but like the 2008 housing market crash, that took a chunk out of it. And then it was every statement I got from then up until Donald Trump got elected, whenever that was, 2016, I guess. Well, right before he did, maybe late 2015. It was every statement I got. I had negative interest rates on it. They were taking money away from me. They're holding my money and they was taking money away from me. So anyway, quit my job. I cashed that thing out because it was losing money. I didn't see no point in having money sitting in there when it was losing money. So I cashed it out, and let's see, what did I do with it? I paid it all towards the principal of my first house, which I was renting out at the time. I still am renting it out. But I paid it all towards the principal of that, and I think after I did that, I think we took our next tax check and just paid that house completely off. But anyway, when I started back at working where I'm working now, I started the 401k back, and I only put back the 3%. The company matches 50 cents on a dollar up to 3%, so I put that 3% back. And that's been, honestly, I don't even know. It's been a few years, maybe 3 or 4 years, something like that. So I've been putting this 3% back. And I got a statement yesterday in the mail for this past quarter, which was, I think, so it was the end of September, August, and July. August, and September was that quarter, and I made 10%. I think it was like 10.07% interest off of that. And like I say, I only have like $7,000 in it now, which, if you think about it, I spent 15 years to get $15,000 in it, and then I spent 3 years to get $7,000 in it. When I started it back up, I said, I'm only putting a little bit of money back in it. I don't have a whole lot of money in it. I went all high risk, and that's all I'm going to do. I'm just going to do this straight high risk stuff. And I figure, because it's not really my retirement fund anyway. Being a real estate investor, that's my retirement fund. So anyway, I just go all high risk stuff. They say when you start one up, when you're young, do high risk, and then kind of move it back into the less risky stuff as you get older. I'm not going to do that. I'm going to keep it in this high risk stuff until the day I cash it out. Once I get to where I'm not making money off of the high risk stuff, I'm losing money, take it all out, I can put it into a rental property and really make some good money off of it, So anyway, I got 7,000 in that. Let's see. 3 months ago I had 7,000 in it, and then I made the 10.07% interest off of it. So that knocked it up to 7,700. And then between my contribution to it and the company's contribution, it got up to just under $8,000 in 3 months. And the major advantage I see being a real estate investor and having the 401k is, if something goes wrong and I need money in a hurry and I don't have it, I can take out a loan against it for up to half of what I got in there. So like if a heat pump goes bad in the house, I can get a new one put in, take out a loan for that $4,000. All I gotta do is come up with an extra $500. My buddy up here will knock one in, put one in there in a heartbeat, run over there, change it out, done. And I'll be paying on it for the next 12 months. But, it's gotta be done. Another advantage, and I really like the loan program on these, because like I say, I can take up half of whatever I've got in there out, and I can pay it back over 1, 2, 3, 4, 5 years. And like that money. Oh, and you do pay interest on that loan, but that interest goes back into your account. So even though you're paying interest to yourself. So in my opinion, it's a 0% interest loan. That works out good for, like I said, if you need money in a hurry for a repair, if you need the house pops up on the market. I mean, looking at it from a real estate investor standpoint, if a house pops up on the market and you're that close to having enough money for a down payment and you want to get it quick, take out the loan. That's, in my opinion, the 401k should be a backup. It should not be don't let that be your main retirement fund. It's not set up for that. It was set up to kind of help, not to completely take over. It was the 401k started when companies stopped giving pensions, or to help companies stop giving pensions, something like that. And it does not replace the pension. Matter of fact, I'm thinking that between a 401k and Social Security, you can't make it. In retirement, you're not working anymore, you're not bringing in any income. It's not worth it. So, take the loans out from the 401k. Use that to make real money, to make an income, generational wealth, whatever you want to call it. But anyway, 10%, that's what I wanted to say. Like, subscribe, share, and I'll be talking to you soon. Be sure to comment. Later.